Good morning and welcome. Happy Tuesday, Patriot Radio News Hour. Welcome to all our listeners who are joining us for hour number 2. You're listening to the Patriot Radio News Hour. Our toll-free number, 800-951-0592. The website at allamericangold.com. And I'm Joe Jaquin, CEO. Man, the rally just relentless. Gold up another $15. You know, closed at, $13.99 on Friday, $14.30, right? Gold's just gaining a percent every single day. ETFs, another every day now, 4, 5, 6, 10 metric tons a day going into the ETFs. You know, that's where the billionaires and the millionaires love to hang out. Yesterday, I didn't think I was going to do a show today. Thought, no, you know what? You got to sell out before me to come back. We sold all of our $20 libs, all of our $20 Saints. Still got there's still a few Gold Eagles, but not enough to worry about, so we're back. Congratulations. Got a great, really great odd. Matter of fact, I can't believe it. Something that never happens is going to happen, so hang in for that. We got so many things to talk about. In the first hour, we were kind of talking about central banks. And all of a sudden, and really not all of a sudden now, we're probably about, 10 to 12 years into central bank buying gold again. And remember, I kept asking, what happened? What changed? And really, it makes total sense. Right? And how long have I been telling you? You need to be your own central bank. In the 90s, when central banks were the biggest sellers of gold, right? Think about the Bank of England. What a bunch of morons, don't you? Right? They sold all their gold at $250. Well, you know what? Here's what happened, right? They believed their own bull. Right? They believed Alan Greenspan was the maestro, and they figured out the riddle to central banks. And the debts were going to get paid off, right? Remember, our debt was going to be paid off by 2010. So they're like, yeah, we don't need this gold. Let's just sell it. Of course, now what? Right? Now we got a debt that, put it this way, the last time we saw things of this nature, and you start looking at what's happening with what the central banks are up to. And Alan Greenspan said that, the debt was going to be paid off, and now, and everybody was talking about balanced budgets, remember? Right? Anyone talk about a balanced budget today? Matter of fact, no one even talks about the debt at all. And when they do, here's what they say, let's get rid of the debt ceiling. And now all the central banks, nobody sells. Right? The only time anybody sells is because their gold got confiscated. Right? Because Venezuela had to borrow money and use the gold as collateral. That's it. Everybody's buying, and they're buying because they already know. This isn't a surprise. This is what is real. And what is real is, right, the end of this cycle of fiat money is getting ready to come. Right? The dollar as the world's reserve currency, right? We're whether we like it or not, right? We're well off the peak. Right? We're already on the descent. Right? I liken it to Mount Everest. Right? The dollar, we got to the summit. Unfortunately, it looks like we're not going to make it back down again. Right? We're not going to get there. But we've started this descent, and we've talked about it. I've illustrated it with interest rates. right? We couldn't even get to 2.5%. Now we're on our way back down, right? We went to zero for 10 years. None of that. There's no economic textbook for that. You know what the economic textbook for that says? Yeah, that's about the end of your currency. That's what the textbooks really say. They don't say, I've got more tools in my toolkit. All it says is, guess what those tools mean? The end is coming. Are they going to say that to you? No. Did they pretend at least? You know, they had a nice little... Listen, they pretended they fixed it, right? And we bit our tongue. Because you knew they didn't fix it. I know we want to believe. Can you imagine? We're going to run, and let's talk real numbers, okay? We're going to run a $1.6, $1.7 trillion deficit this year on a federal level. And GDP growth, we're going to be lucky to get 2? Really? Right? This is what we're talking about. Right? And remember, the interest that we were going to save by paying off the national debt was going to go to Social Security and Medicare. So, see, we didn't have a problem. Guess what, Houston? We got a big problem. When we get back, we got data to talk about. We got home sales to talk about. And then a special that I'm so excited about. All of that coming up next. Yeah, we're back. 800-951-0592. Gold's up another $15. Silver hanging around. Got right up to that 1455 level. Sold all the way back. Went back. Actually went negative. Now's on the way back again. Right now up 7. 1546. Again, another key level, right? Silver's holding. We need 1555. If we break 1555, then you start getting 25-cent increments, right? 1575, 16 and a quarter, so on and so forth. But man, 93 ounces of silver now for an ounce of gold. But, you know, this has been the trend here, just keeping you all in the know. Silver's going to come. It's just, I think gold's going to make it come with it. And that's how it is. Big brother is going to yell at little brother, hey, get your butt up here before I tell mom and dad, some type of a thing. But that's where the markets are. The Dow is down today. We got a bunch where everybody's waiting. Jay Powell's going to be talking more and more. It's now a 50-50 split on whether we're going to get 25 basis points in July or 50 basis points in July. It doesn't matter. That's right. You know what? Here's what you're looking at for gold. Gold's going to rise with a 25 basis point rate cut. Gold's going to rise with a 50-point rate cut. Gold's going to go to the stratosphere if there's no rate cut. Right. So we're sitting in a good spot, waiting on a pullback that they're just not coming. Right? I mean, they're just not coming. And I know that some people are waiting. By the time you wait, by the time it comes, I don't know when it's going to come. Is it going to come tomorrow, next week, next month, right? Is it going to come at 1,500, 1,600? I don't know. They're going to come at 1,450, 1,430, 1,800. We don't know. But right now, gold's up again because we got more bad news. I mean, that's really what it is, right? There's the reason why we haven't had a little bit of a pullback. And by the way, any pullback's just going to be by the dip. But none of the news has been good. So we had 2 pieces of data out today. New home sales and consumer confidence. Start with new home sales. Disaster. This was a May number, too. This one I didn't like. Some numbers I've been trying to say, hey, let's hang in there. This one was bad because this is May. This is the big housing month, the big sales month. April, May, June, down almost 8%. Missed big too. They were looking for just under 700,000 annual rate. Came in at 626. Down 7%. Essentially, the drop in mortgage rates didn't do anything. And this is what has me really worried. Listen, the rate cut doesn't matter. 25, 50. Did you see the 10-year note back below 2%? It's at 198. I forget who. One of the big banks now forecasting the 10-year note going to take out its new all-time low. So the all-time low was 137. They're now looking for about 1%. It's supposed to help things that interest rate cuts are supposed to help loan demand, and specifically homes, autos, business loans. Home sales are terrible, right? We know that. Auto sales, terrible, right? Used car sales are okay, but that's about it. Business and loans, we're going to talk about that as well. Big development. People are getting worried. I'm starting to hear this more and more. Talking about drying up of liquidity in the junk bond market. Okay, so this isn't, hey, Apple wants to borrow some money to buy back their stock. It's not what we're talking about. These are companies that are junk, the quote-unquote zombies that nobody wants to lend them money. Nobody wants to buy their bonds. So you've got some liquidity issues lurking. It's not an issue yet. But I'm starting to go back, and I want to use the housing thing as an example. What happened? Well, people stopped paying. And really, when you think about it, it was only 5-6%. In Arizona, it's probably closer to 10 or 12. But nationally, that's who wasn't paying. What really happened was the banks couldn't sell the debt. Right? They couldn't sell the mortgage-backed securities. And now people are starting to say, hey, this is similar. Right? We have a subprime problem. We're starting to have a subprime problem in corporate debt. And so we'll watch it. We'll watch it together. I'll keep you updated. But for the last several days now, been hearing more and more about having some subprime and what I'll call junk bond market liquidity issues that we'll keep an eye on. The other piece of data was consumer confidence. And, of course, you know that I make fun of this data, right? But Wall Street cares very, very much about this, right? Because they're all worried about what? The faith of the American public in the economy. The second the generally dumb public gets worried about the economy, right, things get bad. It fell today, and it fell. They were looking for 132. They got 121, which, that's a big miss for confidence. And, again, the lowest levels since 2017. When you look inside of it, consumers claiming current business conditions are good fell, right? So those say that current business conditions are bad, that was flat. So people were saying, hey, it's up. The same amount of people said things were bad last month as this month, but the number of people that said things were good fell. The number of consumers with a less favorable assessment of current business and labor market conditions, that one fell the most. over an 8-point drop. Consumers saying that jobs were plentiful fell. Not a ton, about 1.5 points. Those that were claiming jobs were hard to get, that one jumped 5. So inside the detail, not great. Consumers that were less optimistic about the short term, down. This one was down 11 points. So things are definitely tightening up. Consumers that said that business conditions would improve 6 months from now fell. That one fell 3 points. Those that expected business to get worse, well, you know the trend. That was up, and that was up 5 points. So inside I'll say one of the Wall Street favorites. Consumer confidence. Bad news all the way around. The Dow is down. Not down, it was down 100 right after the news broke. Right now it's down about 50 basis points. Like I said, the 10-year note, 198. Gold's up 15 in change at 1,430. Today, I've got a great opportunity in quantity, too. This is what makes it even better. I've got 150 $5 liberties. Okay? 150 $5 liberties. They're they're $400. But I got a great deal. You're going to save $20 per coin. That brings your cost down to $380. That puts you at about $20 over spot. You take spot divided by 4, about $20 over spot. But here's what is incredible. $20 gold today. $90 over. $20 gold, $90 over at $15.20. Today, you're going to buy 4 $5 liberties for the same price as a 20, and you know that happens rarely. Rarely. Most years, it never happens. You will go 10 years without this happening. You see it, every once in a while, you'll see the $10 lib be the same price, 2 10s to equal a 20, but you hardly ever see it on the 5s. I've got this opportunity. It won't last. I guarantee you this will not last throughout the day. U.S. $5 liberties. These are the older ones, 1866 to 1907. At $380 a piece. Gold's at $1430. So that puts it about $358. So here at $380, about $22 over spot. What a great buying opportunity! Buying a $5 liberty. I mean, normally, when you think about these ones, normally you're paying about $50 over. I mean, you just are. So to have them here at $22 over spot, what a great opportunity. And here's the best part. I got 150 of them. 800, 120. There you go. Just happens just that fast. 120 of them. 800, 951, 0592. Fractional material. I mean, this is really what we're talking about. And when we talk about gold, I brought up this point in the first hour, and I want to bring it up again. If you take gold from $1,800, so go back to 2011, gold's off the peak. Okay, it was 1,900 down to 1,800. Okay, so we lost $100 from $1,800 to $1,395. So let's call it $1,800 to $1,400. That $400 drop in the price of gold. 4 trading days was $335 of the $400. Remember what I told you was going to happen when gold broke $1,400? What did I tell you? There's no resistance in these charts, right? And I gave you the number. The first number is 1535. So now are we going to go straight line to 1535? I don't want to. I hope at some point we get a pullback, but what are we talking about? Is it going to pull back $20, $30? Maybe. Gold's up $30 in the last 36 hours. But there's not a lot there. The big move, though, if gold hits 1,600. 1,600 to 1,800. Almost nothing there either. 800-951-0592.
This is the Phyllis Schlafly Report, a daily look at the significant issues of our time from an experienced conservative perspective. Sponsored by Phyllis Schlafly Eagles, this broadcast continues the legacy of Phyllis Schlafly and stands against forces that mock traditional values, deny freedom of religion, slander America, and would redefine the family. Now, the president of Phyllis Schlafly Eagles, Ed Martin.
Even though Phyllis Schlafly led a movement of American housewives to soundly defeat the Equal Rights Amendment in the 1970s, some say the feminists have achieved much of their agenda without the ERA. After all, Hillary Clinton nearly became president, numerous women are running for president in 2020, and there's no shortage of women in Congress and corporate boardrooms. But feminists are still not happy because having women participate in government was never the goal of the feminist movement. In fact, there was no greater advocate for women's participation in government than the greatest anti-feminist of them all, Phyllis Schlafly. Instead, feminists are unhappy because most women still prefer to care for their children, even if it reduces their career opportunities. Stay-at-home moms are respected today, and American women stay home in higher percentages than in other industrialized nations. Phyllis Schlafly rightly saw ERA as a threat to young women who wanted to start a family with a husband as the primary breadwinner. Phyllis's unique message about the need to protect a woman's right to make that choice first took root in 1975. In that same year, the percentage of women aged 16 to 24 in the workforce began to level off. Since 2000, the percentage of all women participating in the workforce has fallen because more are choosing to stay home. Everyone is entitled to their own opinions, but no one is entitled to their own facts. Feminists see statistics about more women staying home with their kids, and they're horrified. They say less women in the workforce is clear evidence that women are being oppressed. To those of us seeing the facts in a more realistic way, that oppression bit is nothing more than a hypocritical talking point. Nobody is trying to shackle women to their stoves. Phyllis Schlafly certainly never did. She wanted women to have the choice to stay home, get a job, or go to school. Feminists don't want to let women choose to stay home. As far as they're concerned, if a woman says she wants to stay at home, she's too stupid to know what's good for her. It's time the feminists became truly pro-choice and let women choose to stay home if that's what they find most fulfilling.
This has been the Phyllis Schlafly Report from Phyllis Schlafly Eagles. You've seen the desperation of women's marches, the disgrace of Planned Parenthood, the rise of savvy young conservative women. Radical feminism is heading down a dead-end road. Voice your opinion on what's really important to women at phyllisschlafly.com. That's phyllisschlafly.com. Thanks for listening, and join us again for the Phyllis Schlafly Report.
800-951-0592. Two lines are open. 95 left. They're just going to go that quick. 95, $5 liberties. If you're on hold, just be patient. Wendy will get to you in the order that you called. If you're a new customer, listen, we're not like everybody else. We don't play any games here. Just simply call up, call the 800 number, and just tell Wendy, I want the special. That's it. And then she's going to ask you, how many would you like? And you just tell her. 1, 5, 10, 20, what you got left. I don't care, whatever that number is. And then she's going to give you a total. You pay for it. Personal check, credit card, whatever you want to do. here's the thing, too, and I guess I got to take the time to explain it. So if you've never done business with us, when you place that order, we give you a trade number. That locks you in. Let's just say, hey, you wanted 10 of them. It's $3,800 for 10 $5 Liberty Gold pieces. Wendy's going to ask you, do you want to pick up or do you want us to ship it to you? We have office here in Phoenix and an office in Colorado, in Johnstown. If you want us to ship, it's $35. And it's just that way, because that's just what it costs. There's nothing we can do. Right? We ship everything registered, insured, U.S. mail. They won't leave it at your door, right? They're not going to leave it in your mailbox. They're not going to leave it at your doorstep. You have to sign for it, right? If you are not home when the postman delivers, they put a slip in your mailbox, and then you take that slip down to the post office, and you pick it up there. It's just that simple. Why do we do it that way? Because they don't lose them that way. Nobody's out, right? And once you sign for it, you own it, right? That's how it works. Until that point, it's on me. But when you get that trade number, so you call up today, I'd like 10. It's $3,800, and you say, you know what, Wendy, I need you to ship it to me. So $3,835. Obviously, she'll get your mailing address and all of that stuff. Then you mail us a check. Because when you place that order and you get that trade number, you're locked in. Gold goes up another $30 tomorrow. That's not on you. That's on me, right? I'm not going to call you up and say, hey, you owe me more money. No. Same thing. If gold goes down tomorrow, that's on you, right? You don't get to call me up and say, hey, I want to pay less. You're locked in. I'm locked in. I know we do it the old-fashioned way, right? We take you at your word because I'm always at mine. And you can, if you want to put it on a credit card, you absolutely can. It's 2%. And everybody out there, credit card fees aren't 2%. I mean, we're gonna take it. I'm willing to split it with you, really, because everyone's out there. I get it. You want your miles, you want your points, right? But if you want to put it on a credit card, right, you got to pay. You pay a little more for it. We take them all. Visa, MasterCard, Discover, Amex. We take them all. But once we have good funds, right? So most people, hey, save the money. Just write me a check. Write me a check. Put it in the mail. We'll process it, and then we ship it to you, registered, insured, U.S. mail. If you're local and you want to pick up, you save the $35, right? And we'll tell you, hey, we'll call you when you're here. Come and pick them up, right? If you want to pay cash when you pick up, you can. Just remember, you got to stay under $10,000, right? And then I got to ask you the questions, right? Are you a terrorist and all that other stuff? And by the way, as we're watching all that, so you got all the options here, and we're not coin stores. So we do, if you want to pick up, we'll do it all by appointment. We'll call you. Wendy will call you. Arlene will call you. If you're in Colorado, Jason will call you. We'll set up an appointment. Nobody's going to be in here while you're doing your business, right? It's between you and us, and that's it. That's how we operate. No bait and switches. No phone calls, right? We're not going to call you up and try to, sell you something else. We don't call our customers. I mean, we call you to come pick up your stuff. Some people ask us to call them when we ship their product so they know it's on the way. We'll do that stuff. But we don't cold call you, ever. 800-951-0592. Gold at a new 6-year high. By the way, the best monthly performance in gold in the last, 6 years or so. Big picture. The magnitude of the base, and I keep referring to this, which had taken 6 years to form. Okay, and most specifically, right, we're talking about that last level there at that 1267. We suspect we could see a retest of the all-time record high, according to the head of global technical analysis at Credit Suisse. Listen, when I'm seeing these every single day. In a note to its clients on Monday, Credit Suisse says that gold, the bottom is in. Look for a retest of the old all-time record highs, saying that the base has provided the platform for a significant and long-lasting rally. Listen, and I hate to say it, the rally's going to go with the decline of the dollar. By the way, the dollar at a very precarious, sitting right at, high 95 and change, 95.90 to 96. Break down there. We break below. We break squarely into the 95 and change number, right? That chart gets a little ugly, right? The decline picks up pace. This is why all of these guys with their analysis and all of their charts, all of these algorithms, right, they all have the same thing. Gold breaking out after Jay Powell said it would act as appropriate to try to keep the economy going. Listen, I got bad news on that. Somebody, and I forget who, I wish I remember who it was. They were on the Idiot Box. They were talking about the Morgan Stanley analysis. And I brought this up to all of you out there, a week and a half ago. Morgan Stanley says, if you factor in all the quantitative tightening and easing and all of those things, the yield curve inverted in December. Normally when we get the inversions, that's a year ahead of recession. 800-951-0592. Got two lines open. The last I saw, we had 73 $5 libs left. Listen, you don't get $5 libs for the same price as $20 gold. You don't. We do today. U.S. $5 liberties. These are the quarter ounce fractional pre-1933. And really, these are 1866 to 1907. $380. That's it. $380. You're saving $20 per coin. Right? If you buy 4 of them, it'd be $1,520 instead of $1,600. That's huge saving. We don't operate on these big margins. Take advantage of it. Put them away. When you can buy fractional for the same cost as the 1 ounce, man, you buy it. And you buy it all day long. Because listen, we don't know what's going to happen, right? We want it to be organized. Listen, I want a nice, orderly dollar collapse, right? Bring in the electronic credit currency thing, and everybody, we handle it well. But just in case it doesn't go well, riots, right? Cataclysmic events, I don't know, right? All the other stuff we don't like to talk about. It's great to have some smaller stuff, right? This is like, hey, I need a generator, right? Type of a thing. I need to pay my property taxes, right? This is what this coin would do. The U.S. $5 Liberty, 1866 to 1907. We went 10, maybe 12 years without this being possible. Right? We know at least 4, 5, 6 times a year you can buy 2 $10 liberties for the same price as a 20. That happens. I can't say never, it's happening today, but very rarely does it happen at this level, where you're talking about going down to the $5 level and not having to pay a premium. That's what makes it such a great opportunity. 800-951-0592. We just had one of the Fed governors. I remember I told you this week, going to get a lot of Fed talk. James Bullard, by the way, just took about 60 points, 70 points from the Dow now. Dow's down 120, where he said that in his belief, a half point was overdoing it. By the way, again, remember what I told you. This is what I believe. No rate cut, gold goes up the most. Quarter point cut, gold goes up. Half point cut, gold goes up, but it goes up the least. So good news for gold here. Gold initially sold off, and then now it's gone the other way. Gold's running right back up. Right now it's up 10 and a half. Let's call it 11 now, 14.26. By the way, the dollar, and this is what you got to look out for. The dollar is sitting here at 96.11. 96.11. So we're watching that 96 level, that high, 95.90 to 96 level. That is the big level for the dollar. The dollar breaks down from there, and then we kind of go real quick into the right near 94. So that's another reason why we're seeing the gold price not letting anybody into this rally. We want to pull back, but the news just isn't good. Right? Consumer confidence today was terrible. New home sales, that was the worst, right? We just, a big miss. New home sales down 8%. Really kind of got the market started. That's what got gold moving. Then consumer confidence got the rally moving even further. And if we don't get a lot of good news here, if these reports don't start picking up, the rallies the pullbacks are going to be short. They're going to be sweet, but they're not going to last. 800-951-0592. If you're just joining us, Credit Suisse, in a note to clients last night, believes gold is setting up for a huge rally, calling for all-time highs. Well, calling for gold to retest the all-time record high. By the way, they used the intraday high in their note too, 1921. That was Credit Suisse. So you think about here, we're seeing gold, $14.30 an ounce, right? Credit Suisse calling for 1921. Everybody and their brother now. Even I had to do it. Hey, we're probably looking, 1,700, 1,800. And remember how the charts go. From 1395 to 1535, there's really nothing there. So we don't have a lot of great resistance points. The first resistance point is going to be whatever the first pullback is. Right, so the first day gold doesn't go up, that'll be a resistance point, but those are weak points, right? It'll just push right through. So 1535 is the first real sort of resistance point. Then you got to go from 1535 to 1598. Let's call it $1,600. And then if gold breaks 1,600, there's only two resistance points between 1,600 and 1,800. 1,689 and 1,723. So you kind of average those two, and that's why you're seeing 1,700 everywhere. Because no one really, do we want 1,800? Not really. Do I want new all-time high? Not really. But things are getting a little tight. 800-951-0592. Final segment coming up. $800-951-0592. China's on the move here. China National Gold Corp. It's the second largest miner of gold, studying a bid to buy Canada's Lamb Gold. So China National Gold looking to buy Canadian gold company Lamb Gold, the state-owned gold miner, working with financial advisors on a potential offer. Shares of Lamb Gold are up on the news, obviously, not a surprise there. I don't have any other details other than that. Tomorrow, I'm going to go to the email bag. I forgot to do it. I wanted to get to it today. I didn't have a chance. We'll talk about a little more silver than gold. Hopefully tomorrow we'll see what the markets have. But China National Gold buying again. Listen, the race is on. All the central banks of the world. I mean, you're talking about central banks. And I'm not talking about big, Serbia and Poland and Austria and Denmark. I mean, it's amazing how many of these little central banks are now out there in the gold market. Be your own central bank. Listen, this is a great, great buy. I mean, really, if you think about this is $13.50 type gold price. At $13.50 gold, about $13.50, between $13.50 and $13.70 is that $3.80 on a 5 lib. Gold's what, almost $14.30. So huge value here. 4 $5 liberties for the same price as a 20, and we still got over 60 of these left. So we sold about a little more than half of what we had, but we had a huge amount. Let's get them gone. Put them away. All of the trading is done by computers, right? It's all algorithm based. All of these things. And this is why all of these charts now, they all tell, every computer's got the same thing. Buy. I mean, that's just what's happening. The rate cycle now, we're back in the down cycle of rates. The news is the same, right? More slowing. I'm not calling recession yet. I'm not. I want us to try to stay out of it, but I don't know. It's not looking great. New home sales today, a huge disappointment. Not only did it miss by 8%, it was the worst number of the year, and this was for May. That May's usually the best number of the year. So I don't know. Does that mean it's going to be bad or worse in the fall? Logic says yes, but I don't know that, right? We'll have to wait and see. 800-951-0592. The Dow's down 100 points. And just so you know, so I'm telling you, gold's up 11. Kitco's got it up 6. The price is the same. We're looking right now at $14.25, $14.26. It's all that New York close, aftermarket close, but the prices are still the same. You got gold up, Dow down, 800-951-0592. Patriot Radio News Hour. We'll be back tomorrow.